Hey everyone, welcome to another episode of Adam Talks, a podcast that takes an alternative look at retirement. This is Adam Bergman, founder and CEO of IRA Financial. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, and welcome to another emergency podcast, Adam Talks. GameStop, speculation, and your IRA. So I want to do a quick emergency podcast because I've just been so mesmerized with what's going on with GameStop, AMC, some other stocks, and the craziness and speculation going on in the marketplace. And just such a good example. I'm so tired when financial advisors tell people, and some of my clients, hey, don't buy alternative assets, don't buy real estate with your IRA, don't buy gold, don't invest in businesses, don't do hard money loans with your IRA. It's so risky. It's so speculative. It's so volatile. Why would you do that? When now we're seeing publicly traded companies, GameStop, not a Mickey Mouse company, a company with actual stores and revenues, AMC, everyone's been to a movie theater, maybe not in the last year, but everyone knows what AMC movies are. And we see a situation where in the GameStop, it went from a 52-week low of $2.50 to $380 in the last few months, okay? Just on January 27th, GameStop went up. You won't even believe this, okay? It went up 134%, $200. It went up $200 today. 134%. Okay, AMC, it had a 52-week low of $1.91. It went up to $20.36. January 27th, it went up $14.95. Over 300% return in one day. Okay, these are publicly traded equities. These are not OTC, over-the-counter stocks. These are real companies, and we've seen a run-up and the volatility that I haven't seen since the late 1990s with the internet bust. So what's going on here? Well, in the case of GameStop, it's an interesting story, right? You have short sellers, big hedge funds that see a company that sells video games and consoles in malls. That is certainly not the future, okay? I have two kids and they're gamers, and guess what? They download all their games. They don't go to GameStop to buy games. Their model is broken. That's why these very smart hedge fund founders and hedge fund partners are shorting companies like GameStop. Same with AMC. When's the last time you were in a movie theater, right? Pandemic. GameStop is worth more today than it was before the pandemic. Make sense? No. Okay, so hedge funds have seen all this and they said, well, these companies aren't worth what they are on paper, so we're going to short it. Okay, and shorting stocks are healthy for a marketplace, right? You want to see positives, you want to see negatives, and ultimately it will all work out and the true value of the stock will come forth. So it's okay. It's healthy for a marketplace to have shorters. So what happened here is, interesting enough, social media, power of social media. We've seen it do some bad. We've seen it do some good. In this case, good or bad, a group of people on Reddit followed this Wall Street Bets, about 2.5 million followers. And they basically said, hey, we like GameStop. Let's stop this shorting of it. These shorters, these hedge fund guys are arrogant. We're gamers. We like the company. We're going to pump it up. And that's what they did. Okay. And there's been some good news. The founder of Chewy, Ryan Cohen, bought into it. He got on the board. He actually has made over $1 billion, $1.4 billion in the last few months since he bought into GameStop. Now, he did it legitimately. He wants to turn GameStop into like a Petco. He knows the future of buying video games is not through GameStop, not through the malls, it's online. So ultimately, I think he just wants to use the name and turn it into an online marketplace for gaming. Makes sense. Well, he just made $1.3 billion, almost $1.4 billion by just holding the stock. Probably more because it just keeps going up. So this started on January 11th and it's just been going crazy for the last few days. And then January 27th, it went absolutely bonkers and went up 134%. So this is the power. It's interesting. It's a battle between, random individual investors, probably not many billionaires, probably not many millionaires, just, regular people that taking some of their stimulus money or some savings, gone on Robinhood or TD Ameritrade and some online apps and just, are buying the stock, right? And they're fighting. It's like David versus Goliath. And the Goliath are these billionaire hedge funds that are run by super smart whizzes that worked at some of the largest hedge funds. Some of them started their own, and they pumped in big money to short companies like AMC, companies like GameStop. Okay, it makes sense. On paper, I would short it too, right? Like I said, who's buying games in a mall now? Everyone downloads it. It's like Radio Shack. It's obsolete, no future. So it makes total sense to short the hell out of that stock, and they did. And guess what? These online guys, Wall Street Bets, 2.5 million followers, they started a movement, and it went from Reddit to social media, and within the last few weeks, the stock went from a few bucks to over $380. So it's now about $345 or so. So it's out of control. I had to talk about this because it always bothers me when people talk about alternative assets as this scary investment world, and kind of like the stepchild that's in the corner with the purple hair and the nose rings, and hey, you don't want to go near that kid. He's crazy. Well, guess what? Mainstream equities are risky. Okay, they're volatile. Yeah, in this case, it's really good. It went up from, if you owned AMC or you own GameStop at $4, $5, $6, $10, you're super happy. I actually spoke to a client today that told me he made $30 million owning it. So yeah, kudos to you. But for everyone else that's been on different sides of this, there's volatility in equities, right? If you look in the S&P 500 on January 27th, it's down for the year. Okay, so just wanted to say, my point is, hey, diversification is important. Anyone that tells you alternative assets is bonkers and stupid. Hey, don't buy Bitcoin. It's crazy. Don't buy real estate. Oh my God, you're going to rent out an apartment in your IRA. Are you crazy? You should just be buying stock. It's so safe. It's really the best way to make investments. And again, I'm not an investment advisor. All I know is the government, the IRS, gives you the power to make alternative asset investments. If they didn't want you to make alternative asset investments in your retirement account, they would not have allowed it in the tax code. But it is allowed. Okay, so it's up to you to decide if you want to take advantage of it. I'm a big alt guy. I believe in diversification. I believe in hard assets. I like to go to bed and know that I can touch what I own. Maybe I can't touch my Bitcoin, but I know it's there. I definitely own stocks. I'm not going to say I have a percentage of my wealth in stocks. I'm a firm believer. There's companies I own. I have S&P 500. I own a fixed income. Maybe not as much as I used to with zero interest rates, but I definitely have a good amount of wealth in equities, and that's great. And I'm not telling anyone not to. All I'm saying is, hey, alternatives aren't that scary. And guess what? They're definitely not as volatile as owning GameStop or AMC in 2021. So you thought 2020 was a little crazy. Well, get ready for a wild, wild ride, because it looks like we got some serious volatility in the marketplace. I remember, I'll never forget this. The last thing I want to say on this emergency pod is I was in New York doing a summer associate program, 1999. And I had some friends that were day traders. Okay. All they would do, they would wake up, they would get to their office, they would trade from 9:30 to 10, the same few internet stocks. They'd go get drunk during the day, come back at 3:30 for the last 30 minutes, trade. Didn't even bother trading during the day because there was not enough volatility. And they would make 15, 20 grand a day. And I'll never forget, I had a friend, I'm not going to mention his name, made $1 million. But guess what? Within 2 years, he was pretty much broke, and he sells real estate now. So volatility isn't great, and volatility does exist in regular equities, and it's a little bit worrisome to me. I think we're in a situation where there's so much stimulus, people are at home, we're in an economy that's in a standstill. It's kind of like fake money right now, right? No one knows what's going on, and everyone's sitting home, and the advent of these digital apps like Robinhood and TD Ameritrade, where you can trade for free, and they'll even give you margin, and you can soup all this up with options, where you can basically jump in and even buy more exposure, whether you're call options or put options, and supercharge your returns. And all this is cheap. You set up an account at Robinhood, they're begging you to take their money and margin. So it's really easy to get started. You don't have to be rich to do it. It's super easy and quick. And that's led to some speculation. More people are home. They're getting stimulus from the government, extra money, and don't have a lot of places to spend it other than rent and food, because there's nowhere to go and nothing to do. And people are on social media more, and they're basically been following this situation for the last year. And Bitcoin definitely had a ride as well. We saw it early on with Tesla. Tesla was up 700%. We've seen it with some other stocks, Barstool, we're pumping up stocks, and we've seen it, and it's not going to end pretty. That's all I can say. I saw it in the late 90s. It's not going to end pretty. This isn't real. And just wanted to kind of share my thoughts because, again, it just really upsets me every time I hear a financial advisor, some of my friends that kind of laugh at me and say, oh my God, you let your clients buy real estate with your IRA or private equity. How stupid. You just put the money in the S&P 500 or buy a group of stocks and you'll be better off. And well, maybe not. But, I think it would be nice at this point to own a house, get definite income on a monthly basis, have the security, safety. You don't have to deal with inflation, volatility. And alternatives aren't as crazy as people think, and actually in most cases provide important diversification and actually balance out your portfolio. So that's my take as a tax attorney. I'm not a financial advisor. I'm not giving anyone investment advice. I'm not telling anyone to buy GameStop or AMC, short it, buy it, or Kodak, or whatever the next craze is. All I'm saying is diversify, and if you are looking at alternatives or interested in it, it's not scary. It's super easy to get into, and obviously, I've seen it with my clients. Our returns for our clients, is surpassed the markets. Okay, and we're going to release a white paper on this soon that's going to show over the last 5 years the returns of our clients and the asset classes. And I think once we are able to provide that and make that public, you'll see some of the powers of alternative assets, specifically real estate over the last 5 years. So there you have it. Emergency podcast, GameStop speculation in your IRA, craziness. I hope there's some people out there listening and watching that have ridden this great wave with GameStop or AMC. Anyone thinking of buying, good luck. I think this is like the Wild West, except there's no horses and saloons. We're dealing with, digital trading platforms and mad cash. So just be careful and, just be prepared and have a good foundation, diversify, and stay safe. Okay, there you go. That's my take as a tax attorney and someone in the IRA space on what's going on in the marketplace today. Be safe, and talk to everyone again next week. Thanks.